Hi, I'm Faure Heymans, an equity analyst at RECM. So there's this economic principle called the law of one price, which says that identical assets should have the same price. Like most things in economics, it sounds good in theory, but reality is a lot more complicated. There are lots of examples of things trading for different prices. Natural gas, for instance, trades for $4 in the US, but for 16 in Japan. There are good reasons for commodities to trade at different prices in different parts of the world. Things like shipping, transport, and just local supply and demand all affect price. For financial assets, it's a little bit more complicated. Things like rules and regulations play a role also. A great example is Mundy in 2009 when it was spun out of Anglo American. It was listed on the JSE as both a local share and as an inward foreign listing. Both shares had exactly the same economic rights, but to buy the inward foreign listing, fund managers had to make use of the offshore allowance, which restricted the buying and meant that the local share actually traded at a premium. We took advantage of this, and what happened subsequently was that the rules and regulations changed and the gap closed. We ended up making a profit out of that. Now, rules and regulations aren't the only reason. Human nature is sometimes a great reason for things to trade at different prices. There was an example during the dot-com bubble of Palm and 3Com. Now, Lamont and Thaler did a paper on this example. What basically happened is that Palm was valued at a higher price than its parent company, 3Com. Palm was subsequently totally spun out, and investors who took advantage of the opportunity profited handsomely. Another example which we see currently is Naspers. Now, Naspers owns a stake in Tencent, which is listed in Hong Kong, and the value of Naspers' stake in Tencent is actually higher than the entire market cap of Naspers. This despite Naspers owning MultiChoice, Mail.ru, and a whole bunch of other e-commerce businesses. In this example, it's clear to see that the investors in Hong Kong are way more optimistic on the prospects of Tencent than investors in Johannesburg. We've taken advantage of this mispricing by buying Naspers here locally, hedging out the Tencent, and effectively owning the rump of the business, all the other businesses besides Tencent, which we can get at a massive discount. For us, financial assets aren't just pieces of paper. They're real businesses with real values, and we think it pays to look at things like that and to wait for the market to recognize the value.